Hi everyone and welcome to today's morning report on Monday the 5th of September with me, Rich Perry, market analyst at Antec Markets. We've got a relatively sort of positive equity market open and generally a dollar corrective move as well. We've had that non-farm payrolls report on Friday that basically pretty much rules out September in my opinion, and subsequently, what we've seen is the dollar coming off, and it slid. It was a fairly volatile move actually on Friday. It sort of regained some of the losses, but those losses have started once again today. And dollar is down against all the forex majors really now, and I think this is coming as the market's generally going to be starting to sort of reposition themselves for a December rate hike again. You've got Treasury yields which are sort of still on that sort of decline backwards. Marginal sort of up move on the 10-year Treasury yield, but again nothing too significant. But I think just generally speaking, we're going to see a bit of a dollar correction in the sort of coming days. Now, what we've also got is a strong move on oil, really strong move on oil this morning. We've had suggestions that Saudi Arabia and Russia are willing to meet and talk about production freezes. I mean, to be honest, it's they've had this opportunity time and time again previously and not done it. So I'm still fairly sceptical. So we've had a bit of, well, I say a bit of, we've had a 4% jump up this morning in the oil prices. And that certainly is a strong move, but how sustainable that is remains to be seen. Oil pricing in the last sort of week or so has been increasingly volatile, and you've got I think the volatility which will continue probably throughout this month. Really, the end of the month is when you got this meeting in Algeria of OPEC and non-OPEC countries, and we could see the volatility continuing. But certainly the reaction on Friday was positive on the back of the weaker dollar on oil, and again that's continued today on the back of these suggestions that Russia and Saudi Arabia are going to sort of meet to thrash out potential production freezes. Now, we've had out also this morning the UK services PMI. Actually, we've had services PMIs throughout coming out this morning. Just sort of come back and show you these numbers. Now, France actually beat, just marginally beat, but interestingly, Germany missed on their numbers. Quite a significant miss on both services and composite final PMI, and also the Eurozone itself missed on their composite and services PMIs as well. So not great numbers coming out from the Eurozone this morning, but the big news has been this UK manufacturing PMI, which 52.9, that was above the 50.0 expected, but look at the jump from last month of 47.4. That's a jump of sort of 5.5 points on the PMI. That's huge, and that sort of ties in with the manufacturing improvement and also the construction PMI improvement as well, which now all of it is back in expansionary territory and suggesting that the UK is likely to now avoid a recession. So very important numbers, those PMIs, and the sterling has significantly improved on the back of that as well. So sterling is an outperformer today. So that takes me to my chart of the day. By the way, it's US Labor Day in the States, so no US data to speak of, and the US on public holidays might create a bit of volatility as well in jumpy markets, thin trading, etc., etc. So to be careful of that. But my chart of the day is the silver price, and silver strongly higher on Friday. We had that payrolls report that sort of, in my opinion, rules out September, and the commodity prices all jumped on the back of that. So silver, gold, and oil, the ones that I will look at certainly, all pushing higher. And silver broke back through that 1920 resistance of the neckline. Not only that, it created a small base pattern, a breakout, so that was above 1910, and I'll show you on the hourly chart how 1910 is a level here. Resistance a couple of times acting as resistance and supportive on Friday as well on a bit of a pullback. So 1910, between 1910 and 1920 is clearly a level the market is looking at now. So I think that if it can hold this break and push out it certainly looks like an improvement is on. You've got these momentum indicators which are much more improved now. The last few days, hourly RSI, so holding above 40, pushing towards 70. That is suggestive of an improving outlook. The hourly MACD lines as well, much more positively configured, although just dropping back a little bit. I think the suggestion would be that little corrections are now being seen as a chance to buy. You've got the 89-day moving average. Look how many times this moving average has provided the basis of support in February, in April, in June, and now looking to be doing the same in August as well. So really important long-term indicator, that the 89-day moving average. So pushing out above 1920 is a strong move, and it sort of reopens the resistance overhead. So you look at 1993 as your initial level. That's a couple of days, 2 weeks ago. And it looks like that is an improving chart now. The RSI picking up, the stochastics on the daily crossing over, confirmed buy signal, near-term MACD lines about to cross higher. So these are all positive medium to longer term indicators as well. So it looks pretty positive now. I think little corrections on silver could well be seen as a chance to buy, and I'll talk through gold in a bit. And my outlook for gold in that I think it's a long-term sort of buying opportunity as well, and I think silver is a similar sort of play. So I wish you good luck in your trading today on silver, and I will speak to you later. Thank you.